Hello again, this is Jerry, as you know, and this is the April 2024 edition of the Monthly Moment. And I'm going to have a little hard time keeping this one under 3 minutes. There's a lot going on. I actually have some notes here. If you see me looking down, I just don't want to miss anything. But here it is. So a lot going on. I think the last one or the one before I talked about interest rates, probably talked about it, a couple of them. But interest rates are the big talk right now, and we have some more information. I think the last one I said I'm kind of happy that Fed Chair Powell indicated he wasn't going to do anything prematurely. In the last meeting now, he officially said he wants inflation to get down to 2%. He put a number on it, which means we have something that we can use that's even more predictable than before. But it also means that it looks like he's not going to be influenced by anything, and he's really trying to work on the numbers. And ultimately, we're in a place right now economically where I don't think they need to lower rates. Obviously, a lot of people want rates lowered. A lot of people don't know why. They just feel like they should be. But unless you're buying a home or have a lot of credit card debt, the interest rates can also help a lot of people. Fixed income, CDs, various fixed products. There's some good earnings right now that we haven't seen in a very long time. So we don't believe it looks like rates have to be lowered. We haven't believed they would be lowered for some time now. And it looks like maybe one or two this year. He said it's a 2% inflation. We just had a consumer price index report recently, which was up over 4%, indicating inflation is nowhere near where it needs to be and actually still on the rise. So we'll keep you posted on that. But as far as that goes, again, if rates went down, we'd probably have a spike in the stock market, but it could be temporary and artificial. We like to build something with a little bit more foundation. So we'll talk more about that, but as of now, it looks like rates are staying where they are, at least for the time being. And honestly, right now, we're kind of happy about that. There's also a jobs report that came out again recently, which looks good. A little questionable. Jobs report came out, numbers were good, but when you dive a little deeper, a lot of those jobs were part-time. What does that mean? A lot of second jobs. What does that mean? Does it mean people are filling positions and they're just desperate to get additional jobs, or they can't get full-time jobs? So even though people are working, maybe they're not making as much. Some question marks there, but ultimately the number was good, the top line number. Dig a little deeper, there's some questions. Also, there's a lot of government jobs. That's a big portion of it. And ultimately, we are paying those government jobs. So how does that affect us overall? More to come on that, but top line job number was good. Maybe you heard it. Dig a little deeper. There's some question marks in there that we have some concerns about, and we're watching that, but we'll see. But overall, the markets are doing well, and companies are doing well, and companies are profitable and moving forward. So we don't have a really, really aggressive stance right now in our portfolios. We were aggressive through 23. We got a little bit more conservative at the end of 23. Currently in our tactical position, the piece of the portfolio we can move a little bit. We're still a little bit conservative in that, and we're really waiting for some sort of a dip or a correction that we believe could happen. We don't think we're going to have a devastating crash unless something new happens, but we're at a place where it feels like we are exposed to a downward dip a little bit, and we think at that point we'll probably use that as an opportunity to turn on the position a little bit more aggressively and take advantage of the recovery from that. So that's that. And then the last thing, of course, is the election. What's going to happen? How's it going to play out? Who's going to win? Who are the candidates actually going to be if they're not going to be who they are now? Most important piece of that is, again, I've said this before, turn off the noise. The media, they say a lot of things, and they make everything way more exciting and way more, what's the word I'm looking for, concerning than maybe it needs to be sometimes. So I think let's all take a deep breath. Let's all calm down. The underlying fundamentals of the economy are reasonably strong. The jobs reports are reasonably strong. The company profits are reasonably strong. And a lot of that is because of downsizing we've had in the past. But we're going into the rest of this year with a bit of optimism. What's the word? Cautious optimism. And we're waiting for more reports. But I think as of now, we're okay. And we're not expecting anything huge this year, kind of either direction, but we're ready for both. We just had a big, long meeting today with our investment committee, made some decisions, have some ideas moving forward. And as always, I'll tell you, we'll do the best we can to figure things out. We don't know everything, but moving forward, we think we have a plan. Looking back, we've done extremely well relative to the markets over the last few years, and we're going to see if we can continue to do that for you. So that was a little longer than I wanted it to be, but it kind of had to be. If you have any questions, concerns, or anything else, give me a call. If you think anybody else could benefit from this, pass it along, and we'll do the same thing next month, and I'm sure I'll see some of you before then. So have a great day. Happy end of tax season. I'm happy it's over, and we'll talk soon. Have a great one.